really good to do this. I'm glad we're talking about fintech. I think it's a really important subject, especially right now. I was just talking to Zach last week about some of the things that Plaid is doing, as well as many of the other fintech companies that you're working with are playing a really big role. So yeah, this is exciting. It was exciting to see my colleague Robert Hackett just now. His beard is a lot longer than the last time I saw him in the office. So yeah, it's good to connect with everyone. So yeah, Zach, you've had a really eventful year. Visa just agreed to acquire you guys in January, which must seem like great timing before the economy just kind of collapsed around us. So yeah, how have you been feeling? How has the year kind of evolved for you? Where are you sitting literally and figuratively right now?
Well, I'm literally in my office in San Francisco, I think this year is certainly one that no one could have predicted, no one could have imagined. I think the level of optimism and excitement for everything that was happening in January relative to kind of where everything stands today, it's a huge difference. Fintech is a field that's been growing incredibly quickly, and as I kind of start to look at what's been happening over the past few weeks, certainly in the fintech ecosystem and what we expect to happen over the coming months. I do think that this is an unfortunate time, but an opportunity for fintech to really deliver in so many senses. And so in that sense, I'm incredibly optimistic about what the future will look like. And so, it's been interesting to come into this year, have to kind of change so many things about the way that we work as a company, the way that we interact with our customers and our partners, the way that we think about scalability, frankly, the way that we think about user research and getting feedback from customers. But in many senses, the thesis for fintech remains the same. The thesis for the change that we hope that consumer financial services or digital financial services can deliver to consumers, that remains the exact same. It's a new arena in which to prove it. And so I'm excited to see what happens over the coming weeks and months. Yeah.
Well, for anyone just joining, this session is called "What Would the World Do Without Fintech Right Now?" I'm Jen Wieczner. I'm a senior writer at Fortune. We're with Zach Perret of Plaid. But I think the bigger question, rather than what would the world be like without fintech? What would the world do without fintech right now? Is what the world is doing with fintech right now? Because this is the first major economic crisis since 2008. The financial crisis, when fintech really didn't exist. So you guys were founded, remind me, Zach, was it 2013 or thereabouts, or?
Yeah, so we started working on, as you may know, we actually built a series of fintech products before we launched Plaid. We started working on those in actually 2012. Working on Plaid at the end of 2013, ended up launching the product, I believe it was the end of 2014, early 2015. And so seeing lots of bits and pieces change over time.
Yeah, so I'm sure some of these ideas were kind of even percolating with you as you went through the last financial crisis. But how are you viewing this crisis compared to the last one and the role that fintech can play or is playing? Was any of this what you would kind of envisioned when you were founding?
Well, certainly not, and certainly. I think in many senses, Plaid and the fintech industry has dramatically exceeded all possible expectations that we had when founding the company. In the earliest days of working on Plaid, we had this thesis that kind of embracing digital technologies could enable developers to deliver better financial services to consumers. We founded the company, we started working on the company in 2012. We were based in New York at the time. The fallout from the global financial crisis was still palpable. You could still see the Occupy Wall Street rallies going on. Whenever you walked through Union Square, there were signs everywhere. And consumer frustration with financial services was still incredibly high. Consumers understood and realized that in many cases, banks make money when they lose money. And this isn't an anti-bank sentiment. It was just a realization that consumers themselves, they didn't necessarily have the products available to them that they really needed. And so in the earliest days, when thinking about Plaid, we wanted to create an ecosystem in which there are lots of products available to consumers. The mantra for the company has always been make money easier for everyone. And when I say everyone, it means consumers, it means businesses. But it's an interesting statement to make because we're ultimately a B2B company. We build infrastructure, yet our goal is a B2C goal. And so our belief has always been, if we create an ecosystem where there are lots and lots of products available to consumers, then those products will be delivered in a much simpler and easier way. Through having many of options available, the competition will allow consumers to win and have really great tools and services that they need. In the last financial crisis, this concept of digital finance and fintech, by the way, fintech was a term that was coined in like 2016 or something like that. So really what we're talking about when we say fintech, we mean digital financial services, doing financial services on the web. When you look at 2008, the way that people interacted with money in 2008 was predominantly through picking up a phone and calling a banker or walking into a bank branch. If you wanted to get a mortgage, you had to go into a bank branch. There was no such thing as a digital mortgage, and digital loans were just beginning. When people talked about fintech, they talked about PayPal basically, and maybe Mint. And so in 2008. Kind of coming out of that, we started to see this emergence of digital financial products. Some of that was better online banking tools built by the banks. Some of that was non-banks. Venmo, for example, was founded, I believe, in 2009. And then you saw kind of in the 2010 to 2013, 14 wave, this huge number of fintech applications start to emerge. And frankly, we feel very fortunate that we got lucky with the timing to be able to support these companies. The difference today, though, is 2008 global financial crisis that impacted people in so many different ways, yet the method of interaction could still be the same. Meaning your bank, you might be in financial trouble, but you could still walk into your bank branch and talk to your banker. Today is totally different. Thousands and thousands of banks across the country are closed. Consumers are encouraged to stay at home. I live here in San Francisco, and I was walking around the other day and saw just this huge line of people waiting to get to an ATM. Because the bank was closed and they needed to do something at the ATM. And what's changed this time is that everyone is being forced to go digital. So people that historically had never walked in, or had never thought about using online banking or had never thought about using a fintech product, suddenly they have no other choice. So they're experiencing digital financial services for the first time. In many cases, applications have been built in order just to solve this problem. So how do we first time onboard someone into a digital financial product? And so in so many ways, I think that this is a proving grounds for what's going to happen in fintech. Can people actually fully digitally do the things that they need to do? And it's going to force investment across the ecosystem. And so this isn't just startups, this is banks themselves. Banks are really investing right now in the scalability of their digital financial products because that's the only way they can really interact. So it is going to be a fascinating few weeks and months, and it's already been really interesting to watch.
When you're saying that products are being built specifically to tackle these problems that we're currently facing, are you thinking of anything in particular, something that Plaid is working on, or what's an example of that?
So specific to COVID, the biggest area that we've seen a lot of innovation so far is around the PPP lending. So as you may have seen, there were a number of fintech PPP lenders that got approved very recently to issue these loans to small businesses. And we've seen a ton of movement across pretty much every small business lender to get ready for PPP, to enable people not only to apply on the front end, but also to then apply for forgiveness, which has been outlined in the program on the back end. So lots of movement there. That's been incredibly exciting. Plaid, we also have launched a product that enables people to verify their payroll, which is a key component of this PPP lending concept. And then on the consumer side, we have historically seen lots of personal financial management types of applications, not just spend tracking, but actually helping you make better decisions, helping you save for a rainy day, helping you apply for short-term loans when and where you need them, helping you figure out how to pay your bills in a more nuanced and fair way, helping you figure out how to negotiate your bills. I suspect that there's going to be an emergence of lots of people that want to use these types of applications. And so while we haven't today seen huge volume spikes on these apps, I certainly expect that we will over the coming weeks and months. And we're starting to see the early stages of that so far.
Yeah. I want to take a minute to encourage anybody who's watching right now, if you have questions, to put them in the chat, and we'll try to address them depending on time later. But yeah, that's really interesting in terms of what you're saying, because I am seeing that some of these apps are experiencing huge demand spikes. I mean, Robinhood has talked to that when there was insane market volatility. They actually had outages. Even the banks, Schwab, Vanguard, even Fidelity, I think, had brief outages when all of this was at kind of peak volatility, at least in the market. But are you expecting, I mean, based on what you're seeing across the industry, and you work, I know, with many of the major companies, are you expecting fintech to kind of be a little bit, if not immune, to kind of buck the downward trends we're seeing with across tech in terms of layoffs and furloughs? I mean, is fintech somewhat immune to that?
Well, first, it's actually useful to explore what fintech is. So we consider fintech to be a digital financial product, and there's a huge array of digital financial products, some of whom will be heavily impacted, some of whom will be less impacted. For example, payroll companies, those are fintech companies. It turns out they have to do a lot of digital financial functionality in order to deliver payroll. And those that end up serving companies where there are less employees will see impact, and we're already starting to see that. Certain segments of lending certainly are impacted as well. On the small business side, a lot of loans that were due right about now are having issues paying. And on the consumer side, likewise, if consumers have less cash, then they're looking for payment extensions and so forth. And so there's definitely some impact there. And I would say, like, on the kind of more infrastructure side, mortgage servicing, this area, non-bank mortgage servicers are in kind of a scary place if consumers aren't fully paying their mortgages. But on the flip side, we're seeing the early emergence of a certain set of kind of investment-related products. So as you mentioned, Robinhood, a lot of the trading companies, anywhere that lets you do investments, their volumes are way up. And so that means their revenue is way up, their sign-up rates are way up, and that's incredibly exciting. That said, I think it's important to keep in mind, though, that only about 55% of people in the US hold stocks. And that number, when you look internationally, is actually lower as a percentage of the population. And so when I think about where I really hope that fintech emerges, it's emerging in a way that I hope helps people interact with and deal with the realities that they have. So if people have less cash flow coming in, how can we build tools to help people manage that cash better? And not just how can we help them capture the upside of perhaps buying the dip, but also how can we help them deal with the downside of having lower income. And so I do think that the coming months will be a proving grounds for fintech. Certainly there will be portions of the market that act countercyclically, but much of the market will act in the same way that everyone else is impacted. And I do think that there are many options for fintech to really help people.
Yeah, I see someone in the chat has a question about how regulators are able to keep up with the ever-changing landscape and demands of fintech. And one thing that we have seen from regulators that I thought was very interesting was they specified, I mean, it wasn't necessarily clear in this whole $2 trillion stimulus package that fintech would have a role and be able to make these PPP loans, as well as to help potentially distribute some of the $1,200 stimulus checks to individuals. And Steven Mnuchin, the Treasury Secretary, came out and said, fintechs will be able to do it, as well as certain other types of banks, as well as fintech non-bank lenders. You've had conversations with the Treasurer. Your team has been kind of in contact with that. Can you tell us a little bit about how that's going and how that's evolved, and how we got here where fintech is able to kind of play a central role in helping distribute the stimulus?
Yeah, one of the things that I've been incredibly impressed by is the velocity with which everyone has moved to help solve the stimulus in the US, and frankly, to help enable innovation to do the thing that innovation does best. And so over the past weeks and months, certainly there's been back and forth. Certainly things could have been done better. And certainly if we'd had more time to plan, we might have done things differently. However, it really has been a period where everyone's kind of pitched in, come up with new solutions, put them in front of the people that are making the decisions, and kind of allow a better ecosystem to exist. Some of the things that I'm really encouraged by, so first, allowing the PPP loans to be originated by non-bank lenders. That's actually a big change. Historically, it was planned to just be the SBA-approved banks. Now there's another process through which non-banks can apply for SBA approval, get them, and then issue PPP loans. So that's really exciting. Second, and this is kind of embedded kind of deeper in the documentation about PPP, but actually the Fed is going to be buying a lot of the PPP loans from the banks. They're also, for the first time, planning to buy loans from the non-banks. The Fed has never backstopped, nor have they purchased loans from non-banks. And that's a big regulatory change that I think will have long-term implications and is frankly quite exciting. And I think, as we look more broadly throughout the ecosystem, what I've appreciated is the openness that regulators have been continuing to show to hearing new concepts, hearing new ideas. It remains to be seen exactly how all this will play out. But it's still early days, though I'm encouraged by the progress we've made so far.
Yeah. And when we talked last week, you were also talking a little bit about how important the data is and potentially, helping some of these small businesses as they apply for these PPP loans. Obviously, you guys are a company that, sits on a lot of data. I guess what more can, the government or the industry do, or even, some of the payroll companies do to help smooth fintech's ability to play a role and to tackle some of the issues in this crisis?
It's a great question. Again, going back to small business lending, it's incredibly hard to get a PPP loan without being able to verify, it's impossible to get a PPP loan without being able to verify your payroll. It's incredibly hard to verify your payroll manually these days. You have to get printouts. All right, first you have to have a printer at home, or you have to go to the office and print out a thing. Then you have to take your printout and you have to give it to your banker in the bank branch, which are closed. And so this concept of going end to end for a small business loan in the traditional process doesn't work. And so we've been working on, with the cooperation of some payroll companies, and hopefully with, frankly, more cooperation from more payroll companies soon, is it a way to digitally and instantly verify your payroll. So how much did you pay to your employees over the last few months, and how much will you continue to pay to your employees over the coming few months? Some of the goods and bads about the PPP structure are that on the good side, there's a huge incentive to create loans. On the bad side, there's a huge incentive for a lot of people to be involved in the creation of the loan, looking for profit. As we think about everything that we do, and as we think about the way that a lot of the kind of more forward-thinking lenders and participants in this ecosystem have come to it, they're saying, hey, we don't care about the profit. All we care about is getting money out to small business. That's why, as we're thinking about building this, as we've built this product, it's completely free for usage as it's being given to these lenders and small businesses. We have no profit incentive here. And I hope that we'll continue to see players throughout the ecosystem saying, hey, there's no profit incentive. We just want to do what's right. We just want to help small businesses, because ultimately it's the responsibility of all of us who can help to help get the country back on its feet and to help small businesses survive this downturn.
Yeah. There are a couple of questions in our remaining minutes about how international Plaid is, and I think more focused on how do you see potential international expansion for Plaid, and where could that take you?
Yeah, it's a great question. And I've mostly been speaking about the United States in this interview. We're doing a huge amount of stuff internationally as well, I should say. Perhaps it's just that I'm here in San Francisco, and so hearing the news all the time, which is my US responses. But yes, we're live in Canada, UK. We're also in beta in Spain, France, Ireland, and the Netherlands. And for us, international has been a huge focus over the past few years. Heavy investment in Europe, really focused on helping enable the large and frankly incredibly innovative fintech ecosystem that exists in Europe to grow, thrive, and ideally over time continue to cross borders. And when we first entered the UK, what was it, about 6 months or so ago, we were just inspired by the quality of products that were there, the way that they think about building fintech products. And one of the exciting things is that you started to see a lot of, particularly the neobanks, but many other types of fintech products come into the US and scale. As I think about what consumers really need these days, it's access and it's simple tools and functionality. And so neobanking kind of coming to the US is a great thing for the US consumer. And we're starting to see US companies try to move into Europe as well and do so at scale. And so as we think about the mission of Plaid, make money easier for everyone, that's a global mission, and we need to be serving consumers where they are. So as we think about what we're doing going forward, international is a key component to it.
Yeah, great. Just a quick question for you as we wrap up. But your deal with Visa, the acquisition, it has not yet closed. Do you have any sort of timeline of when that's likely to be completed? There's a lot of other stuff going on right now, and how that's going to affect your company.
We're incredibly excited for the deal to close. I think what you'll see when Plaid works with Visa is that 1 + 1 = 3. It's truly something that is going to be better for the fintech ecosystem, and something that's going to deliver so much more value to developers, to applications, to consumers at the end of the day. I can't comment on regulatory timelines. Regulators, just like all of us, are learning how to work from home. They're moving as fast as they can, and we so appreciate all their effort. But on the flip side, we have to be patient and give them the time that they need to go through the process they need to go through. So no specific comment there, but I can say that I'm incredibly excited for this to close, because I really think it's going to be better for everyone.
Well, thanks so much for being with us virtually, Zach. Sounds like there's going to be a lot of innovation and opportunity for fintech and a lot of the companies that you work with, and for Plaid itself in the next few months. So I'm looking forward to seeing that. And next up, I believe we have Ken Lin from Credit Karma and John Stein of Betterment going to be joining. So I think some of you have questions about wealth tech. That's going to be a lot. There's going to be a lot in that discussion for you too. So thanks so much, and look forward to seeing you hopefully soon in person.
Thank you, Jen.
Thank you, Zach. Take care.